Hey, I'm back. Another episode of Tax Information from Debbie. Freestyle Tax, Freestyle Jazz for my music side, Freeze Enterprises overall. I just passed my real estate exam, just in case you hadn't heard, and going to be doing some real estate here too pretty soon. I'm interviewing brokers right now. But anyway, back to taxes. The reason I call it Debbie's information and not Debbie's advice is because you never know what the specific situation entails until you're actually looking at the paperwork, looking at things that were sent to you, unless you're dealing with somebody who is very savvy and specific about what it is they have in their hand, a letter, a notice, any of those kinds of things. I don't give advice based on somebody else's return, and I don't give advice based on what you tell me necessarily. I would prefer to take a look for myself. So to be safe, I'm giving you information, and I have to give a shout out to my friend Anthony, who can use your good thoughts right now. And but he's actually a very, very good tax preparer. I've worked with him for several years, and the information that he has and disseminates is usually accurate and very up to date. So I'm going to read to you what he posted, and hopefully you'll be able to get something out of this. And since I'm really reading it specifically for the first time myself, I'm actually reading for information for myself too, and that's something that your tax preparer should be constantly educating him or herself and keeping up with all kinds of updates, because things normally do not stay the same. All right, so when the president signed a budget bill averting another government shutdown, there were some things in this act that expired but are now available retroactively regarding your taxes. The notable extenders: exclusion for discharge of indebtedness on a principal residence. So that means you have to live there. That is your principal residence. It's not going to work for your rental property if you have a rental property. The provision extends the exclusion from gross income of a discharge of qualified principal residence indebtedness through 2017. The provision also modifies the exclusion to apply to qualified principal residence indebtedness that is discharged pursuant to a binding written agreement entered to in 2017. Premiums for mortgage interest, PMI, being deductible. It extends the treatment of qualified mortgage insurance premiums as interest for purposes of the mortgage interest deduction through 2017. This deduction phases out ratably for taxpayers with adjusted gross income of $100,000 to $110,000, and ratably means your tax rate, not your tax bracket. And those are two different things too that we can talk about another time. Above-the-line deduction for qualified tuition and related expenses. The provision extends the above-the-line deduction for qualified tuition and related expenses for higher education through 2017. The deduction is capped at $4,000 for an individual whose adjusted gross income does not exceed $65,000, $130,000 for joint filers, $2,000 for an individual whose AGI adjusted gross income does not exceed $80,000 or $160,000 for joint filers. Companies and tax software providers are working on how to implement these changes and how customers not previously eligible will be accommodated. So if you've already filed your taxes and now you find that these deductions are retroactive, contact the person that did your taxes and ask them how you can get that changed. They may be wanting to do an amendment for you, or the company may have some way that they're handling these changes. The Congress, this last paragraph says, Congress put in the legislation where taxpayers who prior to January 1, 2018 couldn't claim any of the mentioned deductions on their 2017 taxes, and now you can again. Right now, we're waiting on the guidance from the IRS on the processes to amend the already filed returns. So that's one of the answers. It may be an amendment. The software companies are looking at how they can add those things back in. So in general, I don't think it's ever a good idea to necessarily be in a rush to do just about anything. And especially this year, doing your taxes, probably not a good idea to be in a big rush because of so many changes. And as we can see that people now, here it is February 13th, some people have already filed, and now they're going to have to go back and change things if they want to claim those deductions. If they want to claim those deductions. So I'm not saying that if you've already filed, you're going to have to go back, but some of the if you itemize and some of those, or if you have education expenses, some of those things that are going to be added back in, you're going to have to go back and change it if you want the deduction and pay less taxes. So I guess, isn't that the goal? All right, so I have to run. Check me out on Facebook. Check out my Freestyle Jazz page. There's some exciting things coming up on the music front. There are exciting things coming up on the tax front. There are exciting things coming up on the real estate front. And I just had a meeting yesterday to talk with somebody about my nonprofit. Rescues. Oops, just dropped my cell phone. It's cool though. It didn't break. And the other thing is my publishing company for my songs that I write. So I'm having a great time being retired, and I hope the information that I provide you find useful. So take care. Have a great day. Talk to you again soon.